put together a bit of a wrap up here in terms of what we're looking at for the rest of the day, and also as we head into non-farm payroll tomorrow as well. Okay, so we'll go back over to gold and we'll just do a wrap up of what we're looking at on the gold market here. Okay, so essentially for a wrap of the commodity markets today, again, the big headline news has been gold has hit a 9-week high as China worries have hit the stock market. We have seen gold now breach and climb to $1,100 per ounce. European shares have tumbled. Asian stock market has hit 3-month lows. China's central bank has bought 19 tons of gold in December. So we've seen so far today gold climbing above $1,100 an ounce. In fact, it came all the way up to $1,104 an ounce for the first time in 9 weeks on Thursday, as also the dollar fell. Investors channeled money into safe assets as worries over Chinese economy has hit the global stock markets. Okay, a very important point there is that in China, the stock market fell 7% on Thursday after less than half an hour of trading, which triggered a circuit breaker that suspended trading for the rest of the day. And we've definitely seen a safe haven bid on gold as a benefactor of that as well, for sure. So we've seen gold often as an alternative investment during times of geopolitical and financial uncertainty, benefited from the risk-averse sentiment in the markets, along with other haven assets such as the Japanese yen and US treasuries. So just going back to what we discussed earlier on gold, we do have our longer term position on at the moment, which we've entered in at the beginning of the week, which is moving well. We are looking for the next key level of resistance here up at $1,111 per ounce. So we are getting good follow through at the moment. We've managed to close above that critical 50-day moving average. We've had a double bottom, a double base form on gold from the end of December, and you can see here where we're bottoming out nicely, and we've now cleared above a lot of resistance. This whole resistance zone above at $1,083 an ounce, which was capping the price really over December, and then this whole area 1,088 has now been broken out of. We've now also cleared above 1,098, so we're back above that key psychological resistance of $1,100 per ounce here on gold, and we're looking for a potential rally and follow through to 1,111. We've got our longer term positions on, which we've been in just since the start of the week here, as we've been anticipating this January effect move. Now at the moment on gold, I would also just have on your radar, we've got non-farm payroll coming up tomorrow. So with the significant gains that we've seen on gold so far this week, if you look at where we've really broken out from on gold, it's moved over 410 points to the upside. I would anticipate just prior to non-farm payroll tomorrow some profit taking, but it's really down to how much further we'll be rallying today on gold here. But I would anticipate some profit taking, or at least some consolidation here prior to non-farm payroll. Non-farm payroll should be quite explosive as well. Silver is one to look at for non-farm payroll. So at the moment, silver's lagging behind gold. So if gold continues the momentum to the upside, I would then turn your attention over to the silver market. We've got a nice pennant formation, which has the possibility of a nice breakout as well. If it continues to lag behind gold here, we could get quite a nice breakout trade on non-farm payroll tomorrow. And also on oil, we continue to be in our longer term positions for a sell short on oil, particularly Brent crude oil. It's offered another breakdown trade this week, nice day trade for a sell short of key support here. Again, just if you missed that a little bit earlier, the headline news at the moment on the crude oil market, Brent crude oil has slid below $33 to near 12-year lows as the turmoil in China has rattled investors. So we've seen Brent and WTI crude oil fall more than 5% before trimming their losses. US crude oil at lowest prices since 2003, and technical analysts scoping more downside. We're certainly doing that, and we're looking out to the higher timeframes now. So you can see at the moment where oil significantly breaking down right now. We've taken out major support from 2008, and then really we've got this major level going back to 2000, and also resistance from 2003, which oil is testing at the moment. If we do get a breakthrough 32.50 here, we would be looking for the next psychological support zone of $30 per barrel. But in the short term, we anticipate a little bit of profit taking around this zone. It has come back up to key resistance from 2000, and this is now a key resistance zone from 2003 turns support. So we're getting a bit of a retracement along this line, likely to potentially get some explosive moves tomorrow as well in the lead up to non-farm payroll. So it's definitely going to be one to monitor too. Okay, good question. We've also got another question just about gold here in terms of the January effect. What is the in what way does the monthly January effect change affect normal routine? Okay, so the January effect is where you see a lot of fresh cash injection into the market, which particularly if you look at historically affects the gold market. So gold, if you look at the last couple of years, we've had significant moves. At the beginning of last year, from the beginning of 2015, the first 3 weeks of the year, gold rallied 1,500 points from its low to its high point. And if you go back to 2014, the beginning of the year there as well, we rallied over 900 points in the first 3 weeks of the year. Ultimately, actually, in the first 2 months of the year, gold rallied 2,000 points from the beginning of January through to the end of February. So it's a move which traditionally tends to affect gold the most here, where you see this fresh cash injection. You always need to wait for confirmation, though. You need to just make sure that we are going to get a January effect move. It's not guaranteed every single year that it will happen, but this year in particular, we've been anticipating it. It often tends to happen when we're coming off major lows for gold. So gold, we've just come off December from the FOMC statement where gold came very close to retesting its 5-year lows, and gold for last year, for 2015 year to date, it dropped over 10%. So it was already at a good opportunity to buy gold at the start of the year without all the geopolitical factors that we have at the moment. We just needed a catalyst really to bring gold up, and gold's had this typical move of where it's broken out the first day of the year, it's followed through, cleared the 50 MA, building up good momentum, and you're seeing today again another good wave. But typically the biggest move on the January effect happens in the first week of the year as well. It's something that we anticipate every year, and we've really followed this nicely through this year as well. Can you apply that for other markets, or is that only for gold? It's primarily for gold. It does apply to a certain extent to other precious metals. Gold is the biggest mover typically at this time of year. So we've traditionally always traded gold for the January effect. I would say if you have a look across the precious metals spectrum at the moment, you'll see gold is the best mover right now. Silver is potentially getting ready to follow suit. Platinum's a little bit more work to do here at the moment, but gold has been the biggest mover so far. Traditionally, gold is the best mover for that as well.